Hey everybody, welcome to the morning market briefing. It's Monday, March 2nd, 2026. Gentlemen, this is March.
March Madness.
March Madness, we made it. The famed Narwhal Baron Ball tournament will commence seeding round play today. We'll keep you apprised of that situation, but in the meantime, check out thejacobsladdergroup.org. Donate if you have not listened to the long-form podcast with them. Please check it out. And we do have an event coming up on April 1st, but a great opportunity to give back to an organization that's doing a lot of great work here in Cobb County. So check it out. Guys, how was the weekend?
It was dynamic, I'd say.
Lots going on. I do want to point something out. I know we often talk a little inside baseball, but I got messages from Ben at 3:40 a.m. on Saturday. And if you thought, man, Ben's up late, got another one from him at 5:45.
I mean, the wild thing is I had a little poker night. I got home about 2. And for
That hurts.
Yeah, I took a little money off some immigrants, so we fighting the good battle. It was at my buddy Francesco's house, who is Argentine, and above the poker table there was a sweet Javier Malay holding a chainsaw bobblehead.
Oh, that is cool.
May have gotten knocked off and broken at some point during the night, but it was pretty good. Big winner. A lot of people are saying took all the chips home.
That's huge.
So, but it was a long run.
Yeah.
But as poker goes,
That's how it goes. Ben, busy weekend.
Yeah, it was. Apart from the war, it was a good weekend.
Other than the war, it was pretty peaceful.
Yeah.
So yeah, obviously, if you're listening to the call, you're probably in the loop on this, but quite the strike on Iran. Ben, I think you were surprised that action was taken.
hand in the air. I was not expecting this. I thought that Trump had been in this de-escalation mode. I did not think there was going to be another escalation. I thought that, there would be I feel like the more that we see threats in the area, the more it's like there's nothing going to happen versus like Venezuela. It's
Kind of like when they predict a snowstorm.
right.
Yep.
The more you talk about it, the less likely it is.
So yeah, I was definitely surprised about that. I was saying, look at oil. Everyone's saying it's Iran, but I was actually texting with people, and even Friday, I was like, man, look, there's a lot less chance of a war with Iran, this weekend than everyone was talking about. It would happen last weekend and didn't happen. It's, and then of course, about 8 hours later.
it sounds like the leadership of Iran thought that too, so they decided to get together and have a little powwow.
Yeah, there was no designated survivor, as it would seem, and even is it correct that the replacement to the supreme leader is also kind of a king for a day scenario?
Yeah, that's what I saw.
Yeah, I think he's toast as well.
That's tough. I don't know that tons of people are applying for that job.
Well, the people forget that the people who nominate him are called the Council of Geniuses?
Yeah,
They have a name for whatever group of Iranian leaders decides to choose the next guy, but they gave themselves a pretty sick name too.
So big story. I feel like we're still trying to piece together a lot of like the actual what happened, all the details. That's going to come out. We're very much in the fog of the war. I think it's still relatively unknown in terms of what the length of this is. Obviously, it's not a one-day operation. The way we saw with Iran back in June, it's not a one-and-done thing like we saw with Venezuela. A piece is still turning and continuing to evolve. But as we think about the market specifically, oil is top of mind, Ben. What are we seeing in terms of movement there?
I think that's big. You keyed on the biggest difference, and I think that this is, at first this is a days thing, then there's a weeks thing, and now it's kind of the timeline has been 4 weeks, sort of getting into a months thing. So that's definitely having more of an impact on markets than, for example, Operation Midnight Hammer would have done last June. So on the market side, oil is like you said, the most obvious consequence. It had been up a lot already on a year-to-date basis. One of the reasons I was kind of discounting a strike was the fact that we had seen both Brent crude, which is the international contract, and WTI, which is the contract here in the United States. The spread had been roughly, it was about $5. Normally it's about $4, $4.50. So there wasn't really much of a premium to the international contract relative to normal. Well, now it is. Now it's over $7. So we're seeing more of a spread because there's more of a supply issue with the international contract. WTI is also up significantly. Brent now up 29% on a year-to-date basis on that contract, even as OPEC has agreed to increase production by 200,000 barrels a day, which is about 0.2% of global oil demand, beginning in April. So I think that you have a couple things on the oil side. You have a bunch of very large crude carriers, which is their name, VLCCs, that are stuck in and around the Strait of Hormuz. They're not going through, and which makes sense. I mean, if I was piloting a very large crude carrier, I would not go through either. Yeah. I also would not like to fill up in the Gulf of Oman and just be waiting to either get hit by a missile or for my tanker to finally get filled. So it makes sense. So you're going to have a little bit more of a supply issues there, and that'll feed through for a while. And I think that that's playing a role in inflation. I think it's having a knock-on impact on interest rates this morning. For a little bit there, interest rates didn't know what they were going to do. Is it going to be a risk off and interest rates are going to go down, or is it going to be fears of inflation and interest rates go up? I think the move right now it makes sense to me because based on who we have at the Fed right now, usually they'll try to look through interim supply shocks or what they call transitory moves in energy. And you saw them do this in 2021 when the Russians invaded, or 2022 when the Russians invaded Ukraine. And they said, this is going to be an interim, this is transitory. And
Putin's price hike.
Price hike, yeah.
So I think, but right now I don't think the Fed's going to look at it that way. I think the Fed's going to use this as an excuse not to cut rates. And then you see the stocks going down as well, as you might expect, because in part the Fed's not. You might have more of an inflationary issue. The Fed's not going to cut rates, and not only that, but now you have the uncertainty of war. So I think you're seeing a lot of these things stem from the direct impact on oil, even more so than the uncertainty on war, although uncertainty is playing a role as well.
With that uncertainty, we're seeing some volatility. Futures have moved kind of all over the place over the last, looking back into last evening and into today, seeing some movement. I'm hesitant to really, and I would discourage anyone from taking any equity market outlook on this other than to say, okay, there's the oil play we're seeing come to fruition, but also defense stocks ripping, specifically those with lines to missile production. A lot of missiles in the air.
Yeah, I mean, it makes sense. Like you might think the shipbuilders are going to do well because we have a lot of fleet in the area, but you can only build so many ships so quickly. But what they can do is order more missiles.
Yep.
And so I think that's the proximate result. So, yeah, I mean, and as far as looking at markets, I don't know. I think futures are a very poor tell in terms of how the market's actually going to open up. Or it's how it's going to open. It's probably going to open down, and I think, but I mean, it could open down 1%, could open down 3%, could open closer to flat. So, I think that we'll just kind of have to see how that plays out. But I think the direct impact on stocks is more of an uncertainty thing versus any actual fundamental impact.
Yeah, I think the timing of it is interesting too because there was such a delay between when the strikes actually happened and when futures traded even began. And so I think there almost has been so much digestion already that it's kind of hard to tell what's going to happen.
Yeah, you do this on a Wednesday night and we're all over the place.
The morning is chaos, whereas this is like, it's been a day and a half. Things are still developing. I will say I did check in. And so the Assembly of Experts is who's going to choose the
Assembly
next
of
one.
Experts.
And according to Gronk, there are no reports that any of the 88 members of the Assembly of Experts has been harmed. And so I guess that's good.
I feel like you try to keep the experts
Yeah.
around.
The Besson has been on fire this morning saying that there is a rush to the door of any sort of wealth from Iran. So it's interesting to see. I mean, the thing, I don't love it. I don't know. I mean, at this point, how many people in my high school class got killed in that first wave in Afghanistan? And it's like, listen, if these people want to blow each other up and dress their wives up like bags, let them do it, man. I'm very tired of war in the Middle East. And the concern for me, especially if you look around in 2026, is something that I've recently sort of gotten onto as a concept, which is war osmosis. I mean, look at the UK, look at Minnesota, look what all these things are happening and the cultural changes that we're having to digest on our soil as a result is, we launched attacks in Somalia in 1992, and now Minnesota is basically Somalia. I mean, you look at New York, we fought in Afghanistan for 30 years, and, it's basically like 40% Afghanis now. Like, so is this something that we want? Look at the UK. They waged war and imperialized all parts of the Asian subcontinent, and, English people are quickly becoming a minority in the UK. I just don't think it turns out well for anybody. There's going to be tons of death and destruction, and then they'll just all end up here.
I think the goal, yeah, I mean, if just my 2 cents is this is very different than previous Trump moves in terms of I think that he generally avoids going to the roulette table and potentially losing all his money or doubling it. In other words, he tries to avoid high risk, high reward plays, just like we do in markets. Like, we're not going to go and just buy the highest beta. Like, we want if we can get something that's high reward for moderate risk, we'll look at that for certain clients. But we want asymmetry, and it didn't seem like there was asymmetry in this. Moreover, the Khamenei was, he was 86 years old. I mean, it's not like he was lucky to be alive as old as he was anyway.
Yeah, especially in that region of the world.
Right.
Yeah.
I mean, I don't think, I think we probably just accelerated a transition plan that would have already been in place. So and also, like, the goal of this is less defined than previous operations, I think. I mean, they've talked about regime change, but that seems a lot more like Iraq. And like, to your point, Tom, that's kind of how I grew up, is, these wars and everyone in like ROTC getting ready to go over there.
That's the thing that's challenging to me, because I think of, if I were to sit here and say, okay, well, this would be defined as success from this point forward. I think there's obviously broad cross sections of people showing support for what has transpired thus far, especially the initial wave of taking out leadership. I think there's plenty of people that would say that was good. But I'm having a hard time defining what success from here on out looks like, other than just putting a timeline on how long there's actual military involvement from the U.S. The shorter, the better in terms of that outcome. But, if this campaign continues for, call it 4 weeks, and then it's done, what is the outcome where I'm sitting here saying, okay, yeah, that was great?
We had an intern interview here 4 or 5 years ago who had gotten a scholarship to Georgia Tech that was named after a kid I used to eat lunch with, who died in the first wave of Afghanistan.
Wow.
I'm so tired. You remember? I can't remember his name. Ben something. But he had the Scott Fleming. It was from Blessed Trinity, which is where I went to freshman and sophomore year of high school. And that guy, he was literally like the first person in our high school class to die in Afghanistan or Iraq or wherever it was. But it was wild that there was a scholarship that was on this kid's resume, I mean, we have to keep doing this, I just am so tired. Just let them blow each other up. Who cares? They're so far away. It is what it is.
Yeah, I'm with you.
Prior to the outbreak of war, I think our eyes were certainly focused on ISM manufacturing, which is coming out later today at 10. What's interesting is we're looking at it to see just kind of was last month's report a harbinger of good things to come? We're kind of in this weird spot, Ben, where, on the headline reading last month we were at 52.6. We're only looking for 51.5. New orders came in at 57. We're looking for something in the 53 range. What's a reading in which you bring the Ben Nye America's Back Index high?
I mean, I thought we were just cruising on Friday. Hicks, we have a chart on Chicago PMI. This came out on Friday, and we haven't seen a move like this. I think it's the red line in the Chicago PMI, which comes out just before the ISM, and people don't really. In fact, I don't even think Bloomberg has it on its top economic news. But this was incredibly notable for me. This was a really remarkable number. Two remarkable numbers in a row after over 2 years of recessionary readings on it. And then you marry that with the freight things that we talked about on Friday or Thursday. And then the second thing is I was looking at oil, and we have a chart on that too, Hicks. But what you call this is backwardation, which means that people are really buying the near-term future contracts aggressively. Why would they be doing that? Well, they probably didn't hedge enough. They didn't get enough oil locked in at lower prices before. So companies like Delta Airlines and any company that uses oil as a primary input into their cost structure, they are scrambling to get the oil. So I thought that was more of a demand thing. I thought there was a little bit of supply concern embedded in there, but now we're seing that just explode even further. So this was a week ago versus a month ago, and we're seeing that the near-term demand really accelerate. But now, of course, it seems like Iran. And so I kind of discount that. So I'm curious to see what happens with the ISM manufacturing today. I think I know there were a lot of hedge funds who were really aggressively positioned for it. And I think from a markets perspective and just kind of a market watcher trying to get clues from what's going to happen in the economy, I'm very disappointed by all the noise that we've had over the weekend, because that's going to massively disrupt anything that we get from the ISM manufacturing survey is going to be discounted. The prices sub-index is going to be totally discounted because now oil's in a completely different realm in terms of prices. The confidence readings that we're going to get are going to be completely disrupted. So the signal that we're going to get from the ISM manufacturing index is going to be so much less than it would have been otherwise. Otherwise, I would have thought that this might have been the most consequential topic of the week. But as it is, I think that, the only thing of consequence is if prices come in hot, people are going to then say prices were hot before oil came higher, and therefore, the Fed's not going to cut this year. It's going to be the market takeaway. Even though I think that there's a nuance between those outcomes.
And we'll get ISM services later in the week. We'll get earnings from Target, Broadcom, and others. BLS employment report end of the week. Tom, anything in particular top of mind for you?
No, I mean, we're watching bonds. There's such a push-pull between, is this going to cause an inflation, and should we be buying bonds to be safe? I think the interesting thing is the 30-year's fallen quite a bit. The 20-year has not. And so I think kind of moving in a little bit and targeting that tenor is the place to be. But I mean, it could go any number of ways this week. So I think it's just about, riding the wave for the next couple of days and figure out where we ultimately end up.
Good stuff. All right. We'll wrap it up there. We will be back tomorrow. Talk to you guys soon.